Hello friends, welcome to Combrella YouTube channel. So Zomato, one of the unicorns of India's startup ecosystem, is going for an IPO. It has also filed its draft red herring prospectus with the SEBI. And it will be the first unicorn from India's startup ecosystem to go for public issue. So in this video, I am going to analyze the IPO of Zomato. So without wasting much time, let's dive into this video. So friends, I am going to divide this video into 6 parts. The first part is about the history and background of the company. The second part is about the IPO size of the company. Then the third part is about the food industry in India, macroeconomic factors and key metrics related to the company. Then the fourth part, the most crucial and important, the financial analysis of balance sheet, profit and loss account and cash flow statement of the company. Then the fifth part is the conclusion, wherein you can decide whether you want to apply for the IPO or not. Then finally the sixth part, wherein I talk about the fun facts about the company. So Zomato was started by Dipinder Goyal and Pankaj Chadha when they were working in Bain & Company. And their idea to start Zomato is actually quite interesting. When they used to work in their office and in the lunchtime, they used to order food from other restaurants. And at that time, they wanted to order different foods from various other new restaurants. And they were not able to get which restaurants to order food from. So slowly what they started doing is, they started collecting the pamphlets, the menu pamphlets of various restaurants and kept in their office desk, so that whenever they wanted to order food, they could have a lot of options and lot of options of food and restaurants to order. And if anybody else also wanted to order food, they could have a wide variety of options to order food from. And this is the idea which led to the creation of Zomato, and they started their entrepreneurship journey. So in 2010, they formed a company called as DC Foodie Bay Online Services Private Limited. Then in 2012, the name was changed to Zomato Media Private Limited. Then in 2020, it was again renamed to Zomato Private Limited. Then in 2021, it is finally named as Zomato Limited. And the location of the company is Gurgaon in NCR Delhi region. So now let's go to the second part of the video. The IPO size of the company is 8,250 crores, which is the biggest in the last 10 to 12 IPOs which we have had in the last 1 year, except for SBI Card, which was bigger than this. But all other IPOs were nowhere near to this IPO of Zomato. And out of this 8,250 crores, the fresh issue consists of 7,500 crores and offer for sale is 750 crores. And InfoEdge, one of the earliest investors of Zomato, is exiting through this offer for sale after a gap of 11 years. And InfoEdge is a listed company and which owns Naukri.com, 99acres.com and Jeevansathi.com. So what is the purpose of this IPO? What is the company going to do with the money collected from the IPO? So the company has told that it is going to use 5,625 crores for funding organic and inorganic growth and 2,625 crores for general corporate purposes. So general corporate purposes means using the money for general day-to-day running of the company and the business, and 5,625 crores is for organic and inorganic growth. What is meant by this? So organic growth means the company is improving its services, improving its platform, so that and the user experience, so that more people come into the platform and use Zomato, and because of this the customer and the growth of the company happens. Inorganic growth means through acquisition, like how Zomato acquired Uber Eats, and because of which its market increased. So that is what is known as inorganic growth. Then we come to the allocation of this IPO. In this, 75% of the IPO will be allocated towards qualified institutional buyers, 15% is for non-institutional bidders, and only 10% for retail investors like you and me. So friends, this retail percentage of 10% is actually very low if you compare the other IPOs which we have had. In that, the retail percentage was 35% if you take Kalyan Jewellers or Macrotech. All these companies had 35% for retail investors. And why the retail percentage is very low, I will be discussing in the conclusion part what can be the reasons as to why the retail percentage is very low at 10%. The company has not come up with what is the issue price, what is the offer open date, closing date. All these things are not yet finalized by the company because it's only a draft red herring prospectus filed by the company with a SEBI. Once this is finalized by the SEBI, then the red herring prospectus will be issued, and only then we will come to know what is the issue price, what is the premium at which company is going to issue shares to the public, what is the offer open date and close date. But still, without all those information also, we can analyze right now with all the information which the company has filed with the SEBI now, we can decide whether we can apply for the IPO or not when the IPO dates are announced. So now let's go to the third part of the video. As per the Red Sea research report, the food consumption in India is $670 billion in 2019, which is around a quarter of India's GDP. And most of this is only home cooked food. And the percentage of restaurant industry in this food consumption in India is only 10%, approximately 10% in India. Whereas in USA, it is 54% and in China, it is 58%. So the company feels there's a great opportunity once the restaurant industry's market share increases in the food consumption. So the restaurant industry in India is around this 10%, approximately comes to $65 billion in 2019, and it is expected to grow to $110 billion by 2025. And the population in India, USA and China is 1.36 billion in India. USA has 0.33 billion and China has 1.43 billion population. And what is the percentage of people who are having access to internet in these three countries? India has only 43% access to internet, USA has 88% access, and China has 63% access to internet. And in India, this is after the smartphone and internet usage has doubled from 2015. It is only still 43%. So the company feels still the Indian market is very much underpenetrated in terms of smartphone, internet usage. And as the food industry also grows and the percentage of restaurant in this food industry also grows, it feels the Zomato feels that there is a big opportunity available for it to capture. And also, as you all know, India is a very young country. The population is mostly of young people. The median age in India is only 28 years, whereas in USA and China it is 38 years. Western Europe has 43 years and Japan has 48 years as median age. So if the median age of the country is only 28, so all the young people mostly would like to eat more in the restaurants, eat out and order food. So hence this is another market opportunity which the Zomato is trying to capture. So now let's go into the company specific metrics. If you see the average monthly active users of Zomato in the last 3 years and for the 9 months ended December 20, that is from April to December 2020 for the 9 months. If you see, I have given a comparison here. In 2018, it was 13.8 million. Then 2019, it was 29.3 million. In 2020, it is 41.5 million. And in December 20, for the 9 months, it is 29.6 million. What is meant by this average monthly active users? It means people who visit the Zomato app or a website at least once. People who just visiting will be counted as monthly average users. Now let us look at another metric, which is average monthly transacting users. These are the people who transact in the Zomato app or the website. Okay, and this is in 2018, it is 0.9 million, and in 2019 it is 5.6 million. In 2020 it is 10.7 million, and for the 9 months December ended December 20, it is 5.8 million. Now let us see the active food delivery restaurants which are available with the Zomato platform. In 2018 it was 33,000, in 2019 it is 94,000, in 2020 it is 1,43,000, and for the December 20, for this 9 months, it is 1,32,000. Now let us analyze one more metric, which is gross order value. So the gross order value is in millions and in rupees. In 2018, it is 13,000 million rupees. In 2019, it reached 53,000 million rupees. Then in 2020, it is 1,12,000 million rupees. And then for this 9 months, it is 61,699 million rupees. And what are the number of orders placed in the Zomato? For the last 3 years, if you see, it is 30.6 million, 191 million and 403 million. And for this 9 months ended December 20, it is 155.2 million. Also, as on 31st December 2020, the company has 1,61,000 active delivery partners and it is present in 526 cities in India. So friends, just if you can let me know in the comment section as to how many number of cities are there in India. Even I don't know that, and it will be good general knowledge for me also to update it. And it is present in 23 countries outside India. But the company has taken a call recently that they are going to focus on the Indian market going forward. So now let's go to the fourth part of the video, which is financial analysis of the company, and which is the most important part. Before doing the financial analysis of the company, let us try to understand the business model of the company. So Zomato is basically a technology platform that connects the customers with the restaurant partners and the delivery partners. So these are the three people who are in the ecosystem of Zomato. And Zomato has food delivery, Dine Out, Zomato Pro, and then Hyper Pure, which is a B2B platform which has been newly started by Zomato, wherein the company procures high quality ingredients directly from the farmers and sells it to the restaurant. And apart from high quality ingredients, it also procures kitchen equipments from the manufacturers and gives it to the restaurant. So now let us analyze the profit and loss account, which everybody would be waiting for. So if you see the revenue of the company from 2018, 19 and 2020, all these numbers are for the year ended March, okay? And for the 9 months ended December 2020, from April 2020 to December 2020. So if you see the revenue of the company was 466 crores in 2018. Then in 2019, it went to 1,313 crores. Then 2,600 crores in 2020. And for 9 months, December 20, it is 1,301 crores. So revenue has increased consistently. Now, let us look at the underlying figure, that is the bottom line, which is a loss. Without much any guesses, we know the company is a loss-making company. So in 2018, the loss was 107 crores. In the next year, 2019, loss was 1,010 crores. Then in 2020, it was 2,386 crores. And then for the 9 months ended December 20, it is 682 crores. So the loss has reduced in this 9 months ended. And then let us look at one more important financial data, which is basically advertisement and sales promotion expenses as a percentage of revenue. Okay, so if you see the percentage in 2018 was 17.41 percentage. 2019 it zoomed to 94 percentage. Then in 2020 it was 51 percentage, and then in December 20 it is only 23 percentage. So you can say the advertisement and sales revenue is actually coming down over the years, but it is still quite high. So overall, the company is a loss-making company at the overall corporate level, but at the unit level, the company is actually now making profits. So if you see the unit economics means at that particular order level, what is the cost of that particular order, that is delivery charges, commission charges, and what is the income from that particular order which the Zomato gets. In 2020, that is March 20, the contribution profit, okay, contribution profit was negative 30.5. Basically, it was a contribution loss for March 2020, 30.5 rupees, okay, and for the December 2020, it is having a contribution profit of 22.9 rupees. So at the order level, it is making profits, but still at the company level, it is making a loss, because this order level does not take into account all the indirect expenses like salary, rent, electricity expenses. Those things are not accounted in the order economics. If we see the balance sheet of the company, there's nothing much big to analyze on the balance sheet, but one of the good thing about the company is it is a debt-free company. There is no borrowings of the company as on 31st December 2020. The borrowings are nil, and it is an asset-light model because it does not require heavy fixed assets. The major assets of the company are more into intangible assets like software, technology platforms, brands, etc. Now let us see the cash flow of the companies. In that also, we'll see the cash from operating activity, which is a very good indicator of the operations and the cash flow generation of the company. So if you see in 2018, the cash flow was negative 69 crores from operating activity. Then 2019, it was negative again 1743 crores. Then in 2020 March, again negative 2144 crores. And for this 9 months ended December 20, it is negative 269 crores. So cash flow from operating activity tells you how much the company has generated cash or burnt cash. If it is negative, the company has burnt cash on net basis. If it is positive, the company has generated more cash. But in the Zomato's case, it has burnt more cash. So operations means right from the whatever the operations of the company, like getting goods and services, and what is the cost for incurring those services. So basically pure operations, what is the cash flow from those operations is what we can identify from operating activity. Then investing activity, it has been 821 crores negative, 1273 crores negative, which means it has invested in all these various assets. Then next year it is positive 1700 crores, and then December 20 again negative, which means it has invested. Negative, it can investing activity can be negative, nothing wrong. Then financing activity is all positive, which means it has raised money from various investors and it has got funding. These are all positive numbers. And another important factor is there are no listed companies like Zomato in our Indian stock market to compare, because Swiggy is not yet listed. Other companies like Jubilant Foodworks are not exactly like Zomato, though they deliver food, but they also make pizza. And they have their inventory also, but Zomato does not operate like Jubilant Foodworks. So it is the first of a company. There is no comparison available in the Indian stock market for Zomato. So now let's go to the fifth part of the video, that is the conclusion, whether you can buy shares of the company in the IPO or not. So friends, even though the IPO price is not finalized by the company yet as of now, that is the premium with which they are going to offer the shares to the public, but all the minimum subscriptions in case of an IPO for an individual or retail investor is always around 15,000 rupees only. So if the company is coming with a issue price of 1,000 rupees, then you will have to purchase minimum of 15 shares, totaling to 15,000. If the company is coming with a valuation of 100 rupees per share, then you will have to purchase 150 shares. So whatever may be the issue price of the company, you will have to invest 15,000 rupees into the company in the minimum subscription at the IPO level. So what the issue price does not matter here much as of now. So if you ask me, if I were to take a decision whether to invest in the IPO of the company or not, I would actually not invest immediately in the IPO. I would like to wait for 3 to 4 years and see whether the company is making any profits or not in the future. And then if the company is making profits in the future, then I would go and buy the shares of the company in the secondary market. Because if you see, based on traditional valuation, the company is a loss-making company. The profit and loss account, if you see, the company is making loss from the history of its inception. And a lot of people may say that don't go based on traditional valuations, look at the unit economics, look at the future growth prospects, it is all good, unit economics is positive, but still you can't ignore the traditional valuations. So hence I would like to wait for some time, see how the company performs in the future, if it is making profits, and then I would think of investing into the company's shares. And the risk rating which I would give to the company's IPO would be high because of the reasons which I told, loss-making company, and it is going to take time for the company to make profits in the future. And also once it starts making profits, it don't expect dividends from the company, because those profits will be used by the company to reinvest into the business. So hence don't expect dividends into the company. And also if you want to invest in the company, you can still invest, but you have to be a long-term investor, at least 5 years or more. You take the example of Info Edge also, which invested in 2010, and now after a gap of 11 years in 2021, it is exiting. So if you want to be in long-term in this company, if you want to be in the long-term perspective, then you can think of investing into the companies. And whether there will be listing gains or not, it is very difficult to predict. In my opinion, I don't think there will be listing gains or not. Let me know in the comment section whether you believe whether the company will have huge listing gains or not when the company's shares are listed in the stock market. So based on these factors, I think the retail allocation is only 10%, because the company also feels that retail investors may not purchase the shares in high quantity. So with that, we come to the end of this video about the IPO analysis of the company. And let me know what are your thoughts about when can Swiggy come for an IPO? When do you expect Swiggy to come for an IPO in the future? So now only the sixth part of the video is pending, which is about the fun facts of the company. You can also choose to ignore these videos. This has got nothing to do with the IPO review of the company. So now let's go to the sixth part of the video, fun facts. So basically, if you see, Zomato is the most downloaded food and drinks application in India since 2018. Also, the birthday of Dipinder Goyal, the founder of the company, is actually quite interesting. The birthday and as well as the year, which is 26 January 1983. And he is currently 38 years of age. So when he started Zomato 11 years back, he was just 27. Isn't it amazing? Also, another interesting fact is Aparna Popat, the India's badminton champion who has won national games, who is also Arjuna awardee and has also represented India in Olympic Games, is also one of the directors of the company very recently. So with that, we come to the end of this video, my dear friends. Hope you all liked the video. Let me know in the comment section what you think of this video, and see you all in the next video. Until that time, thank you and namaste.